Happy New Year! Welcome to another edition of Mortgage Insider Update. And to start the year off, we're back on the roller coaster. We have seen just a steady decline in mortgage and overall interest rates over the last couple weeks, a couple months actually. It's been quite fantastic. Starting off the year a little off, but that's to be expected. We are planning on a lot of actually new reports coming out today. The minutes from the Federal Reserve meeting in December just came out, which is basically just the transcripts of what was discussed. And as originally predicted, the Fed definitely are holding off on raising rates, but they're not really committing to when they would lower rates. They're saying sometime this year we could have seen the peak in interest rates, or they feel pretty confident the peak in interest rates occurred last year. But will it be the first half or more like late second half of 2024 before the Feds actually cut rates? Only time will tell. First round of reports that come out this month will be the unemployment rate. Unemployment report comes out this Friday, so that'll be a market mover. We are seeing kind of a steady start to the year, a little bit of a pullback after a good rally at the end of 2023, both stocks and bonds. So mortgage rates, kind of moving up a little bit, along with the stock market moving the reverse, moving kind of on the downside as we wait for these reports. Let's take a look at the charts. This week we start off on Wednesday, so first day of the trading year was on Tuesday. The second, as of the third, mortgage rates actually were worse off. They were in the red. They pared that after the Federal Reserve meeting notes or minutes came out. Same thing with the 10-year Treasury. It's actually down 2 basis points. This was breaching 4%. Let's take a look at that. This morning got really close to 4%. Not huge significant number, other than it is a round number, but we do have a 200-day moving average. So we've actually fallen below the average of the 10-year Treasury interest rates over the last 200 days. We can see pretty significant fall in the 25-day average. If you've seen just this straight downward cycle here since late October. Just down, 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 couple of flat spots, including just over the last couple of weeks. Yesterday, moving up a little bit. Today, like I said, starting the day off, coming back a little bit after the Federal Reserve meeting notes. I think the positive there is that the market reacting and retreating as far as interest rates go from those Federal Reserve notes, could leave us not as hawkish as they'd like us to sound. I said earlier the Fed may project that the interest rates start to fall this year, but maybe not until the second half of the year. Well, Wall Street sure thinks it's going to be a lot sooner than that, and that's actually this pullback. So since mid-December, when the Fed actually met, we saw the rates drop. That's when we hit below the 200-day average, and it looks like we're just going to hang out there as we wait for new data to come out this week. When we look at mortgage-backed securities, these work in the reverse of the actual interest rate. So as the investors pay a higher fee or higher cost to buy the bond, the interest rate to the consumer, so our clients, is going to come down. So that peaked here. So we had the lowest point in interest rates, just similar to that reversed chart we saw on the 10-year. That's come back a little bit. Same thing today. It actually pulled down below the 25-day average, so retreating a bit. And now that we've seen the Federal Reserve notes, it looks like it's paring those losses. We're trying to get 2 more days before we get into Friday's BLS jobs report. So we're keeping an eye out on the news. We'll see you next week with an update on what does that unemployment rate really look like. And next week we actually start our Real Estate Mastermind series up again with the Perfect Sales Calendar. That'll be on Wednesday at 10:30. You can register in the description in the both in the YouTube page as well as on the newsletter. Feel free to register and come and be with us as we set up the right attitude and effort in our sales day in 2024. Make it a great one.